Today on Corporate Review, join us as we explore innovative technologies, cutting-edge solutions, and timely discussions from leaders across the globe. This is Corporate Review.
Welcome to Corporate Review. I'm Jackie Bales. Most factoring companies and traditional lending institutions base their receivable financing decisions on a company's financials, their tax returns, credit score, the years in business, minimum monthly sales requirements, or even equity to debt ratios, which makes it difficult for many companies to qualify. Raul Esqueda, president of First Commercial Credit, is with me now to discuss how they are making receivable financing easy to obtain with minimal paperwork. Welcome, Raul.
Thank you for having me, Jackie.
Raul, why is it hard for many small to mid-sized companies to obtain receivable financing?
Well, many businesses do not know that factoring companies exist, so the first choice that they would go to is the traditional bank. And banks do not realize accounts receivable as collateral, so they usually get declined.
So how are you able to extend a factoring line of credit to these companies when a bank would say no?
Well, First Commercial Credit specializes in funding accounts receivable. And what we look at is the quality of the account that our client is selling to. So we base our decision more on the quality of the credit of the accounts. And also, we don't look at financial statements or credit scores from the owners. We're more of a transactional funding company.
What exactly does First Commercial Credit do? Can you elaborate on that?
First Commercial Credit is an asset-based lending company that specializes in funding accounts receivable, purchase orders, inventory. And we're comprised of several companies located in the United States. We have access to Canadian businesses. We are also available through affiliates in the United Kingdom.
What is accounts receivable financing, and how does that actually work?
It will only apply to businesses that sell on credit terms to credit-worthy commercial accounts. Most businesses get into a cash flow shortage because either their sales start to grow on credit, and it comes to a point where they cannot pay their suppliers and make payroll because all their money is tied up on unpaid invoices.
Right. So what kind of businesses come to First Commercial Credit looking for receivable financing?
Any business that sells on credit terms to credit-worthy clients can apply for this type of financing. Typically, we find manufacturers, distributors, exporters, importers, transportation like trucking, and many service providers.
Raul, what are the typical funding parameters required by the applicant for receivable-based financing?
Mostly we're looking at the number of clients they have, their monthly sales volume, and the location that they're at. Typically, we require at least that they do $10,000 a month in sales, that they have good backup on their invoices, and that they're free and clear of any liens.
So, Raul, my last question is really just how important is this type of lending to a growing economy?
Well, a growing economy has a lot of entrepreneurs. And as you know, banks are not lending to small business that are under 2 years old. Alternative lending like accounts receivable financing has become a financial tool that a lot of startup businesses are doing.
Well, Raul, thanks for joining us today. It certainly sounds like First Commercial Credit really can help small and mid-sized businesses take the needed next steps to grow. Thanks for being here.
Well, thank you.